Now I'm going to tell you about 4 stories. Just try to listen to them carefully and think of what you feel from that story, because I'll ask you a question and how do you think about it. Now there's this couple, who had gone for their honeymoon, newly married couple. They had gone to Texas for their honeymoon. And they had very big plans that 4 days they'll be in the Texas. From there they'll go on forward to the Rocky Mountains and all those things. And the first night at the casino, both had a very good time. Second night also they went to the casino. And the husband would be on one table, the wife would be on the other table. And first couple of days, they won about $200, $300, and they were pretty happy about it. On the third day, they lost all what the money which they had. And dejected, they both went up to their room, and they had to cut their honeymoon short, because all the money which they had just spent it at the casino. At night, the wife went to sleep. The husband was still ruing over his bad luck. And then his wife had bought a souvenir which was worth $5, and she had kept it by her bedside. The husband, being dejected, was just looking, and then he saw a strange light on that counter of $5. And he saw a number 17 flashing over there. I think that was his illusion. And something told him that I should go and back the number 17 on the roulette, and maybe my luck would change. He went, picked up this. He didn't even change. He was in his nightgown. He went down to the casinos, because there, those casinos, they have hotels up and they have the casino room down. And he went over there in his in the nightgown, sat on a roulette table and put in $5, bet on 17. The number 17 came, and his intuition went very right. He started winning, and he knew his luck had changed. Then he was winning about $600 million, and he wanted to again place a bet on number 17. However, the casino manager came to him and told him, well, the house does not accept such big bets. So they were willing to give him his money and offered to give their Rolls Royce to take him to another casino, which was much more larger than the hotel had. He readily agreed, and with 2-3 people as bodyguards around him, with a royal treatment, he was taken to another casino. He started playing over there. He started making money, made around $900 million. And at 4 o'clock in the morning, he thought, well, it was time to sleep. But before that, he wanted to push his luck very fast, and he put all those $900 million on one number, and ultimately that number didn't come. The dice stopped on number 30, and he had backed on 17. He lost all the money which he had. While coming back, there was no Rolls Royce, no bodyguards, because he didn't have any money to be protected. He came walking to his hotel casino room, went up, and when he entered the room, the wife asked him, honey, where had you gone? She told her, well, I was at the casino. Honey, how much did you lose? $5, because that was the $5 which we had taken. This was a story, and I want you to reflect upon this story and really let me know how much did he really lose. Second story is, there was this couple, Ramesh and Reshma. Ramesh was a very good stock market trader. Both of them got married, and Ramesh had worked hard, working at the stockbroking firm as a trader, and he had a capital of about 2 lakhs of rupees. When they got married, he carried on with his trading activities, and they were doing well. They were living a very decent life because Ramesh had some good trading skills and he used to make a decent amount of income. One day, after about 2 years of marriage, Ramesh had increased his capital to around 5.5 to 6 lakhs of rupees. That gave him a lot of confidence that in the stock market I can really make good money. And he one day discussed with Reshma that would it be fine if he left his job, because then he could really concentrate on his trading, and his job was something which was coming in the way, and he really needed to do something more in life. Reshma was not at all for him taking such a big risk, because he had a comfortable job at a multinational bank and he didn't want him to take such a big risk, so she was defiant. However, Ramesh, against her wishes, left the job and became a full-time trader at the stockbroking firm. There, he also was very successful trader. In trading, he got good bonuses from this firm, and his capital slowly started increasing. And after a couple of years, the couple were able to buy on mortgage at least a good 2-bedroom apartment for themselves. Ramesh was flying in the air because he was really doing well than his friends or his peers, because most of the money was coming through his trading. And he was very well respected in society, because they were wondering that in just last 4-5 years how this boy has really done exceedingly well for him. Reshma was also very reluctant with the lifestyle Ramesh was living, because no doubt he was earning money, but then he was also spending in a big way. She was also not in favor of buying a 2-bedroom apartment. She wanted a 1-bedroom apartment because they wanted to go slow and steady. Well, Ramesh was not that type, and there came a time that his net worth ultimately was about 60 lakhs of rupees. In about 6 to 7 years, he had made so much, and his trading spree went on continuing, and his success also grew. However, there came a downfall in the stock markets, and Reshma told him that now you be careful, we have got this much amount of money, now please you quit trading, because all these years you have been very lucky to have this running streak of only winning money. So let's now consolidate. Now we are going to have a kid and you cannot be taking such risks. Ramesh did not heed his wife's advice, and when the market tanked, Ramesh lost a sizable amount of money. A year later, they were not even able to pay the mortgages on the house, and the house also had to be sold off, and they had to shift to a rented house. Reshma filed for divorce, and her argument was that he is a reckless gambler and there is no way that she can spend her time with him. Ramesh filed a petition that the allegations of Reshma in a plaint that he had lost 60 lakhs and all were totally false, because he had been very conservative and he had lost only 2 lakhs of rupees. And it was Reshma who was trying to blow this out of proportion. So the matter was filed in the court. I want you to really think about this matter. Was Reshma right in her statement, or was Ramesh right in his statement? Third incident. There were two friends, Satish and Sahil. They both had a very good job at a bank. Both were very good friends, and they both decided that since their salaries were good, they should at least indulge themselves. And both were fond of having good food, so they decided that every month we should at least go and have dinner at a 5-star hotel. So they started. First time they went to a hotel and Satish paid the bill. The bill was somewhere around 3,000 rupees. Satish flashed out his credit card because they both were in the bank. The bank had given them the credit cards and they paid the money. They both had a good time together and they were looking forward for the next month. Next month it was Sahil's chance to pay the money. Sahil was very happy. They had a good dinner. Sahil flashed out his credit card and they had a good dinner. Third month, same way, Satish went on. Satish paid. Fourth month, Sahil unfortunately, they think, forgot his wallet. Forgot his credit card in the wallet, and he had some cash. So that day, he could not flash his credit card out, so Satish asked him, what happened to your credit? Did your credit get curtailed? He told, no, it's not curtailed. I just forgot my credit card at home. So, well, I'll pay the bill by cash. So, the bill was somewhere around 3,500 rupees, and he paid by cash. Next month, when they had to go out, Sahil refused to go out. Satish was a little bit perturbed. Did his question that is your credit card, revolving credit got curtailed, did it hurt him? And was that the reason that he did not want to go? Sahil did not answer anything. He's saying, no, I don't feel like spending so much amount of money. Well, reflect on this story. And why did all of a sudden Sahil refused to go out for 5-star dinners? Lastly, I was witnessing a cricket match in Mumbai. When you are when there is a cricket match, you have those ice cream fellows going round and round and trying to sell you ice creams and all. There was this gentleman just sitting about a row in front of me, and half the time he would be on his mobile, half the time he would be watching the match. And he was very peculiarly dressed. That's why my eyes were always on him, because he used to shout and then used to talk on the phone and again shout. So I didn't know what he was doing. And then an ice cream fellow came and everyone was buying ice cream from him. That ice cream happened to be about 8 annas or a rupee more than what you get it outside on the stalls. And this fellow, kitne ka ice cream hai? Told him, sir, 10 rupees ka hai. Nahi, idhar to baat nahi tha. He started arguing with him and fighting with him that how can you overcharge so much, how can you make a profit, you are selling so many ice creams, so you are making so much of profit. He started calculating his profit, and ultimately he refused to buy the ice cream because it was very expensive. The match went on, and in that match, whenever there was a wicket or something, he would really go up and start clapping, and he was totally hilarious mood, and he would again be on his phone and talk to some, and then I realized that he was actually placing bets on the cricket match. And then all of a sudden, he called that ice cream fellow, bought about 30 ice creams from him, and he told, well, I don't have so many, so he said, tum leke aao. He got the ice creams from other person and started throwing the ice creams all around. Started distributing the ice creams, and then kitna hua? He paid him for the 30 ice creams and gave him another 20 rupees more. You keep this. Now this same person same person was fighting to buy an ice cream for himself which he wanted to eat. And the same person, after some time, he was distributing free ice creams to others. Now, what was it which was happening? Now consider all these 4 episodes and think on them. We'll reflect them on later on. Was I a good storyteller? Thanks. Okay. Now let's go by this. Scenario 1. Imagine you have bought a ticket for rupees 1000 to witness the one-day cricket match between India and Pakistan. When you reach the stadium, you realize that you have lost the ticket. Will you spend another 1000 to see the match? Reflect on it. How many would spend 1000 to see the match? Okay. Now let's go to scenario 2. Imagine the same scenario and you are about to buy a 1000 ticket when you arrive. At the ticket counter you realize that you have lost 1000 kept aside for the ticket. However, you have in your wallet another 2000. Will you buy another ticket and see the match? You'll buy this thing. Now, if you are like most of the people suffering from mental accounting, you would have said no to the first and yes to the second. Although both present the same characteristics, a loss of 1000 and spending another 1000. So there was no way on you trying to tell yes for something or no for something, because the loss in both the cases were the same. But the entertainment cost in both the things was around 1000 rupees. Then there was no reason for anybody to judge a different type of an answer for the same question. But why did some people do this? Because as human beings, we have different mental accounts. We treat some money very differently and some money in a different account. We have different accounts for the same amount of money in our mind. That is the reason when, if the same result is going to come out of an action, you choose to differ in those decisions. Money is actually fungible. Whether you find 100 rupee note down on the road, 100 rupee if you win in a lottery, 100 rupees if you have earned as your salary, they both are the same. Because all the money has the same purchasing power. 100 rupees has the same purchasing power, irrespective how you have really earned it or how you have got it. But we choose, we accord different values to the same amount of money. This is what is called mental accounting. People separate their money into mental accounts, necessarily treating a rupee in one account differently from a rupee in another, since each account has a very different significance. Now, mental accounting is another pillar of behavioral finance, and we all tend to make certain mistakes about mental accounting. And at the end of this course, you will realize that so many of your financial decisions, would have been to your advantage had mental accounting not been working on you. This is the tendency to place different values to the same amount of money on how you have acquired it, the effort taken to acquire it, when it is acquired, and what circumstances have you acquired that, or what circumstances have you paid for it. Now let's review all the past episodes which I have talked. Now in honeymoon in Texas, what do you feel? Was the husband right in telling that he had lost $5? Or had he lost $900 million? What was? How many would say that he had lost $5? And how many would say that he had lost $900 million? Okay. Now those who said that he lost only $5 are suffering from mental accounting. Because why do you say that $900 million, if he would have picked up his bag and got out, he wouldn't have got that money? How can you say? Had he quit the casino, he would have got that money.
One question.
Yes.
So every time he bet, did he put the entire amount on the bet? Supposing he bet $5 and for $5 he bet $10. So when he put the $10, was the entire $10 put, or was it, say, I'm just putting 5 out of the 10?
See, irrespective of that is, he went on putting the money, whatever he was winning, he went on putting it. You assume that he put everything over there.
So at every step, it's like your answer is very over.
So, but then the casino did not force him to be over there. He could always take his money and go back. The rules of the game are very simple, that if you are winning your money. But if you consider that he lost only $5, that is, you are prone to mental accounting, because you believe that what belonged to him and the $900 million or what, this was a hypothetical example I had given you, was now if you are going to question yourself, hey, how can he win 5 to 900 million? Well, you can even think it at $15,000, But if he would have quit the game, that was his money. But when you are prone to mental accounting, what you are thinking is, it is not his money. It was the house money. And so he's lost the money which he's won. And this is what normally we all of us do. Kya ho gaya tha? Sometimes, itna kamaya tha. You ask someone on the markets that, okay, how have you done? No. They're saying, I had invested 2 lakhs. I was making 10 lakhs. Kya ho gaya? Now they're saying, again it's 2 lakhs. Yeah, I didn't lose any of my money. But he's lost 10 lakhs. Yes.
Then on context of the situation, as in here in the honeymoon and later situation, his livelihood was dependent on his earning that money. In the divorce situation, his livelihood because he's given up another job.
Yeah.
So for both these people, it will be 2 different contexts. For him, it was just $5 that he had to pay. In the other one, it makes sense to say that he lost a lot of money because he was so livelihood and dependent on it.
No, but in both the cases, in that case, in the divorce case, he had 60 lakhs of rupees and his wife told him that you please quit. Now let's play it safe. You have had a running streak. So it was their money and they went out of it. I mean, he didn't quit and he lost, and he believes he lost only 2 lakhs. No, see, here is not a question of lifestyle. Even this guy's lifestyle, suppose, if this guy also would have taken that money, his lifestyle would have been very different. Here we are not talking about how will they live. See, don't get into the nitty-gritty. You get into seeing that how much is lost. He could have gone away with that 900, but because of mental accounting, he thought there was no effort to earn it. Because he kept in his mind a mental account. This is gift money or prize money or casino money, and my money is only $5. That was his, what we are talking about is the mental accounting in different sectors in his own mind. Yeah.
That is exactly an example what you said right now. If it's earnings or something, you place it, the same amount, you place it in different, you look at it in different ways and different. She's doing the same thing wherein she's not looking at earning, she's just earning. She's looking at was it a livelihood or was it not livelihood. And finally it was his money, which he could have taken back home, but he did not.
No, my question is, how much in the divorce? Reshma filed a petition that the divorce ground was that he's lost 60 lakhs, he's lost all of our wealth. Which is, she is right, because 60 lakhs. Now this person's mental accounting was, ye to main kamaya tha, now let it go, now I am not bothered because I had 2 lakhs. So Reshma is wrong in telling that this thing, I lost all this money, I have lost only 2 lakhs. Now that's a mental accounting error. Yeah, someone wanted to ask? Yeah.
You said about the 60 lakhs, but she had been asking him to stop since he had 5 lakhs.
Yeah.
So, I mean, they have been asking her, she has been asking him to stop at 60 and 5. Why are they considering 60? Can we get 5 as well?
Yeah. No, she was asking him for this, but here the question is, what is Ramesh's argument that he has lost only 2 lakhs? Now, she has been always asking him, it could be at 5 lakhs, 5 lakh, 25,000, we don't know that. But when he lost 60, Reshma is telling that you lost 60 and Ramesh is telling I lost only 2 lakhs. 2 lakhs. Now, why is Ramesh telling it's 2 lakhs? Because in Ramesh's mind, in his mental accounting, for him that winning money was not his money. And for Reshma, she believed that it was our money, because you had won it and it was there with us. Why did you gamble away everything? See, that's what mental accounting is there. Now, whatever you are talking from your own intellect way, you are right. But this is how mental accounting is working. Now, what you are trying to say is 5 lakhs, 10 lakhs. Yes, it could be anything. But Ramesh will always feel that I have lost 2 lakhs. Because Ramesh is suffering from mental accounting. Any more questions? Okay.
Ideally,
Yeah.
the value association should be same, ideally. Or are you saying that the mental accounting is right or wrong?
Mental accounting is wrong in these two cases, because you had all this money, you lost it, and you believe that you did not lose that, you only lost what you had. Now that's a wrong way of putting that money, because money is fungible. They believe that whatever I have got in gambling, and if I lose it, it's not my money, it is the house money. Now that is the moral of the story, that's house money, but actually you have won it, so it's your money. And that's how people treat the same amount of money, depending upon how it has earned differently. Now here he has earned it by gambling, so for him it's different, it's not earned anything. And for him, if he had this $5, which was his money only, because he went with $5. He could have come back with all that money, but he believes, well, it was not his money, he won it from the casino, it's gone. Satish and Sahil at a 5-star hotel. What happened? This thing. Why did Sahil quit going out with Satish?
So probably because we paid cash, we realized
Yes. Up till now, when you are using credit cards, you really don't realize how much you are paying, because it's plastic money, it just gets swiped and you don't realize. That day when he dug into his pocket and when he paid at that 5-star hotel 3,500 rupees, that time he realized, how can I be spending that? And I think that all of us are prone to the thing, because credit cards were actually issued with an idea of convenience. But today we have started taking revolving credits and all and paying heavy interest rates on that. So, this was another mental accounting. As long as he was just flashing the credit card, they didn't even realize what they were doing. And one day when Sahil dug his pocket, that time he realized, well, I cannot be spending so much. The cricket fan, what do you feel about him?
So probably his mood was reflecting on how he was behaving with Raj Mentor. So when he won a bet, he was...
Yes. When he won that money from the bookie, because he was always talking to the bookies and all, he thought that all that money came to him free. So on the first ice cream, he was arguing, fighting with that person, and this is a true story, by the way, because I have witnessed it in myself, and he was totally, this thing was, and he didn't have any ice cream. He was fighting when he wanted to have, he didn't have any, he just distributed it everywhere. Because he thought he has won from the bookies, he thought the bookies were paying for it. And that's what he was shouting. Arey bahut kama liya, bookie log ka khao, tum khao. That is what he was shouting. But the bookies were not paying, it was his money which was giving. Okay, now imagine that you go to a store to buy a lamp, which sells for 3,000 rupees. At the store you discover that the same type of lamp is available at rupees 2,500 at another branch of the store just 500 meters away. Will you go to the other store for lower price? Yes. Good. Scenario. Now, imagine that you go to the same store to buy a sofa set, which sells for 25,000 rupees. At the store you discover that the same type of sofa set is available for 24,500 at a branch of the same shop about 500 meters away. Will you go to the other branch to get the lower price? Yes. Oh, good. So now, slowly you are learning. You cannot be affected by mental accounting, because normally what people would do is, when 3,000, a discount of 500 rupees on 3,000, they think is quite a lot in percentage terms. So people will say, no, 500, because you are only spending 3,000. And when you are spending 25,000, that 500 is really nothing. So normally you won't any. So if I have on 25,000, what is 500? Because this is another type of mental accounting, whereby how much the amount of purchase is also under question. If you are spending a big purchase, then maybe small things really don't matter. And when it's a small thing, if you're getting a discount, you'll really think in terms of percentage, and then you'll do a whole lot of things. But normal rational people would, for that 500 rupees, irrespective of that, if you have to walk 500 meters, it's worth going. Whatever you are buying, whether it is 1 lakh, 2 lakhs or 25,000 or even 500. Now, it is because of this mental accounting, suppose there was this person who wanted to buy a stereo for his car, and he was always thinking, why to buy 40,000, I should not be buying a stereo for the car, forget it, the old one is going on. He was pretty happy with it. And but then when he bought a new car, which he paid 7 lakhs for it, the salesman offered him leather seats, this thing stereo. He went on buying everything and just bought bought all the things which he was resisting to buy. Because when you are making a big purchase, small things like accessories, they seem very irrelevant to you. And in a way, what you are doing is, you are integrating your losses, which we learned yesterday, that you segregate your profits and integrate your losses. So here is, in one stroke, he knows that 7 lakhs is taking a mortgage on the car. Okay, you get this and just get rid of it. And that is the way you start spending. Because mentally you believe that, okay, I am spending 7 lakhs. 7 lakhs ke samne what happens? The 40,000 stereo is nothing. And that's how most of these cars, manufacturers, showrooms, they sell you accessories with it. It's because of your mental accounting. And if you consider this person, he is in a worst financial position after having bought the car at 7 lakhs, because he'll be paying the installments on the car. So his financial position has deteriorated. But in spite of that, in that deterioration, because of mental accounting, he is also buying an accessories which he did not buy when his financial position was much better. This is how we make financial mistakes. Businesses understand this very well, mental accounting. That's why they sell you extended warranties also. Because you really don't buy a warranty on a CD player or a TV. But when you are buying a TV and they're saying, when they offer you this, you get tempted and you start signing those checks. Because with those big checks, these small checks sound very immaterial. Service contracts. Certain things really don't require service, certain things require service. But when you are making a big purchase decision, you blindly put your signature on service contracts. In fact, aquaguards today sell very cheap, but in spite of that, you are so scared that if something happens to my basic necessity of water, they are able to sell you service contracts which range from 400 to 600 rupees. Now sometimes why don't people, they say we are very conservative, we are not reckless spenders, but we are not saving enough. What sort of mental account you feel that such people would be suffering from? People consider themselves that no, I don't spend for this, I don't spend for this, but they are not able to save enough.
It's not need to be one big purchase, many small investment purchases.
Yes, perfect. These are the people that you will find that they don't have a car or they'll use a second-hand car. They think you will not see them as reckless spenders because they don't spend big money. However, in small purchases like groceries and all, they are losing their discipline of spending their money. Because when the amount is small, the discipline goes off. And this happens with all of us. If we have to buy a refrigerator or an air conditioner, we do a lot of research and try to find out whether we are paying the right price, which model is there. Now these are brown goods and white goods. There cannot be much price differential, but for saving 500 or 700 rupees, we'll go out of our way, to travel miles north, miles west, miles south and try to get the best deal. And we'll be saving maximum is 500 to 750 or 1000 rupees. However, in our daily groceries, which we buy every day, we lose that discipline. We just go to, okay, you buy this, you buy this. You don't haggle about the price at all. Now imagine, if 10 rupees every day, only 10 rupees every day you save on your groceries, it's a saving of about 3,500 rupees. But mentally, because of mental accounts, for us, that's not there. Because we always think that large purchase requires discipline, small purchases, we lose that discipline. On the contrary, small purchases which we do regularly, we should have the discipline rather than the large purchases. Now, size of the amount when you have to invest also makes a very big difference. Here also you have a different mental account. Now, suppose if you get a tax refund, say of 25,000 rupees, you normally start thinking, tax refund 25,000 rupees, how should I, what mutual fund should I buy, where should I invest it, what stock should I buy? But if you get a tax refund of 1,000 rupees, don't even think of it. You just think, okay, and you tend to splurge it because it's a small amount. It is not recorded in your mind. A 25,000 rupees would be recorded. So next time when you are making these decisions, understand that whatever money you are getting, whether it is big amount or small amount, it's your money, and that same money could be put to productive use. Sometimes there was a time where if you had small money coming in, you could not invest into the markets. But today you can buy even 1 share, 2 shares. So that excuse is no more there, that with small savings only, you can really build up your net worth or your capital. So don't worry about having small incomes coming to you. If they are nicely put to use or to invested, then you will have your wealth growing. Don't tend to splurge on them. This is normally, I have come across people. I've just bought this stock, it's just 8 rupees. Kitna jayega? 8 rupees jayega. It is 100% loss. 100% loss. That's why people don't buy stocks which are 200 rupees, which are good stocks, but they will buy junk stocks because they are less than 10 rupees, because this is how their mind works. So what it will go? Maximum 8. But when you buy 8 rupees and when maximum 8, it is a 100% loss. It's the same thing that if you buy a 200 rupee stock and it goes down to 200 rupees. So for all the day traders over here, this thing, don't get tempted by this thing. It's cheap. Why is it cheap? Because it is cheap. In this, and now you'll see a lot of, in this mental accounting, you'll see a lot of other biases also clashing with each other. Now this is, it could be loss aversion also, or this guy who's talking, they say, he's a gambler, because in the loss aversion tip, that he would always go in for a gamble. So, for 8 rupees guy, I don't mind. Actually, he's taking that flip of a coin, that I don't lose anything, I don't mind losing everything. Plastic money is the most expensive. It's one of the best innovation the financial markets has come out with, and the worst innovation for the people who use credit cards. If you don't understand that. Revolving credit they offer. I don't need to even explain you this, because you all would be into that trap also by this time. Go on paying interest. Sometimes to impress certain people, you become big spenders because you start flashing out your credit. This only makes you poorer. because you get into the debt trap, and not only you spend more, but you spend also poorly. That's also very important to understand, because in your mental account, when your money is only just as good as plastic, all your discipline of rational allocation of resources takes a back seat. Then you start spending poorly. Now that is one of the most important things where you have to bear in mind, that credit cards would make you not spend more, but make you spend very poorly. Now the flip side which you asked me, mental accounting is good or bad? It may be good in certain ways. That if you inherit a big amount of money from a person, who has been a very pious person, very good person, then that mental accounting will help you to treat that money in the same way as that. So there is a flip side for everything. So is the case with mental accounting, that how do you look at the money which you have earned. That's why you have to always consider that every money is always earned money. If you want to look at it in a very different way, consider that every money is holy money. So these are the different types of mental accounts which we have seen. Earned income versus gift income, small amount versus big amounts, large financial decisions versus small purchases, plastic money versus real money, and the sacred money is inheritance I just mentioned above. So these are the different types of mental accounting, and I think each one of you should be aware that any point of time when you are making any spending, investing, any purchasing decisions, are you prone to any mental accounting errors? Now, how do investors behave because of this mental accounting error? Now, they hold on to losing investments. Now, that is also a part of the loss aversion. That even when you are loss averse, you hold on to losing investments. Now, when it is mental accounting, why do you hold on to losing investments? Because in your account, in your mind, you believe that loss comes only when you sell. Otherwise, there is no loss. Otherwise, you are doing absolutely fine, only if you sell. Now, that's a very different type of mental account. Now, this is where a lot of behavioral biases, they clash against each other. Investors earn less interest and pay more. Some guys do margin trading, and at the same time they tell, no, my family is very secure because I have got fixed deposits in the bank. If something happens to me, they'll take care of this. This is margin trading. I do it because I think I'm very good at trading, and this helps me to leverage myself so I can make more profits. Paying in margin trading 24% interest, 26% interest, and earning 6% interest. The differential is so much that when that person is doing both the things, he is becoming poorer and poorer every day. Bonus shares. Company issues bonus shares. Now, what is bonus shares? You are finance students, you know what it is. It's just a book entry that the reserves are capitalized and the investors' share price also goes down when the bonus comes in. Now, in spite of that, every time a bonus is to be issued or something, the stock market, would celebrate that and the stock prices start going up. Bonus shares is a classic mental accounting with everyone because it's the same thing, it's just a book entry, and in spite of that, people go on buying shares because the company is going to issue bonus shares. Day traders. We have a couple of day traders over there. Day traders, the mental accounting error is that when they make money, they remember that. When they lose money, they believe that they were winning and that's why they are losing. Secondly, another mental accounting error which is very crucial for them is the brokerages which they pay, the taxes to the government which you pay, they all form, because at every trade you do, you are being charitable to the government as well as to the broker. So there is no way that you can earn so much that after taking out all those expenses you do. But your mental accounting is such that the day you have won, you believe that you have done a great job, and next day you go and do the same mistake, and then again when you lose, you feel, so what? You had earned and you had lost. But over a period of time, you'll see that the balance is negative. Yes?
Something like a scenario where people create even free as well. Say a share was at 50 rupees. It went up to 100. After it goes up to 100, I sell off half of my portfolio. So that in a way I am making the remaining number of shares free. Because I am taking back my capital. Now I don't care where it goes up, down, I don't care about those free shares. Is that a kind of mental accounting?
Yeah, in a way it would be that way.
Or is it good investing because you are actually taking...
See, first is, if you ask me, is not good enough because you don't know what you are doing. Because if you believe that it's not a bad stock, then you could be selling it. Then why you are selling half-half? That shows your own decision paralysis. But well, you don't mind taking half because you want to justify yourself that, well, at least my money is back. So from an individual point of view, it's fine. Now it depends upon what sort of land. If you are a trader and if you are doing that, definitely is the right thing to do because you are playing it safe. But being a day trader itself is wrong. The idea is not what your strategy. This strategy could work, this thing works sometime. It may not work all the time. See, anything which you have which has a consistent backing, you go with it. So in a trading, if you are a good trader, if you make 10,000 rupees daily, if you can consistently do it for the next 1 year, great. But nobody can do that consistently. Okay. Are you prone to mental accounting? This is another quiz. Imagine you are at a mall and you like a stylish suit. You have just been gifted 20,000 from a relative. Will you use that money? Now everyone is going to be smart, I know that, yeah. But go outside and then you start applying this. Will you buy the suit? No. Yes. And now? You have 20,000 in your bank account. Will you buy the suit? Now, don't try to get into the details, do I require the suit or not? No, this is just that what is going to be your impulsive thing, you know. No, because most of the time, because we have been trained to intellectually think everything, no, do I require the suit? Which suit it is, which color it is? Because so many times when I give this presentation, these are the questions, no, if it is pink, I don't know, I am not asking whether it is pink or blue, you know. So here is, normally if you have money in a saving bank's account, or you have been gifted 20,000 rupees, it's the same amount of money. So there cannot be anything. If you need a suit and if you are going to buy, just because if it is gift money, that's why you are going to buy, then again it is a mental accounting error. Have you set aside any savings for emergencies, all of you? Okay, then do you have revolving credit on your credit cards? Okay, now if you have answered in both the cases yes, you are prone to mental accounting. Because if you are putting aside savings and then you are borrowing here at a higher interest rate, so you are prone to mental accounting. Plan of action in a thing like this. One is always pay cash. I don't mean you just tear up your credit cards and throw them away because they can always be useful to you in emergencies. But I would suggest if you have to make a payment, if you have a credit card, go to an ATM, take out that money and then pay your bills. Over a period of time, I am telling you, within 2 to 3 months, you will be very disciplined when you give your cash. Because when I was your age, we didn't really have credit cards which you could go around. But you are in an era where you have grown up with credit cards. So I think that would be a good exercise to do. Get back to our era where we only paid cash.
You can be disciplined and paying off the credit card bills also. Because normally they give a 45 day on this thing. What you can directly do is put an ECS to your bank saying that on the due date you just pay off whatever money it is. If you have discipline there you can have your convenience with the card and also not only about having cash, paying in cash gives you discipline and convenience.
No, see, I'll tell you, there are ways, but when you are so accustomed. See, today you are looking this from a very different point of view. But I have, if you go to the US and all, those people are so madly they're saying only into plastics that see, today from an Indian point of view we have been taught certain that we have always been savers. Those guys are big spenders, and it is more with those people just flouting. You are right. Yesterday what we talked about, that if you are not able to have a discipline with yourself, you go in for SIPs. Similarly, you instruct your bank to pay your mortgages, I had mentioned, instruct them to pay the credit cards. But credit cards help you to spend poorly. Now that is the catch. That if you may have a discipline of payment, but with flouting credit cards, you can spend poorly.
In this case, you are doing mental accounting because you are comparing. See, finally, discipline is discipline when you spend with cash or credit card.
Correct.
You can keep the same discipline.
No, I agree with you. Yes.
But what we are saying is, you are doing mental accounting in terms of creating discipline. I mean, you are assuming that the discipline you will have with cash is different than the discipline you will have.
Will be, yes.
Which is wrong again, because finally discipline is discipline. If you are going to set a target saying I will spend only this much, whether it is card or cash, with a card it's more convenient. I don't have to carry cash all the time. It's easier. And you stick to this.
Rational guidance, normally.
No. What you say is right. If you can have the discipline, nothing like this. You think you have to buy a suit. Don't buy a suit because I don't want to wear a suit. See, that's also a discipline. See, wealth has two definitions. Wealth is how many things you own or how many things you can do without. Even that's a wealthy person. All our forefathers were in that category because and whatever I am talking about just now is your parents, your grandfathers, they would have all told you the same thing. It's not that I am not talking rocket science. But you may believe me because we don't believe our own parents, which even I never did. So this may make some sense to you. Otherwise, this is convention wisdom. Behavioral finance is not. Here, there has been some study in the last 20 years on behavioral finance, but otherwise, all our forefathers, I am telling you, they were having that discipline. You think any of our forefathers would have bought any consumer good on credit? They will not. They would rather not spend on credit, because the worst mistake to do is buying a consumer good on credit or buying a car on credit. Because the day you buy that and it comes in your house, it has lost 35% of it. Even a car. And you buy that on credit and do that. What is that? It's a discipline which you have done. Now, how many of you have cars which you have bought on mortgages? You will find a lot of people would have that. Now, that's a wrong move to make. Because what happens is, we are just now surrounded by so much of advertisement, so much of, now that mental heuristics we are going to do in the other session, where you will realize that most of your decisions are guided every day by other people. The environment is totally controlling you. The environment is controlling you and you are not controlling yourself. Be alert when spending big money. Sleep over windfalls. When you get a windfall, what to do is just put it in a bank and then sleep over it. So what will happen? Endowment effect will take place, because that it becomes a part of your environment. Then you don't think that it is this thing, a windfall which you have got. So, and then after a month or two, the joy, this thing, is subdued, and then you know, okay, what can I do with the money? And lastly is, you all, this thing, treat every income which comes to you, even if you find 10 rupees on the road, you consider, because I am walking, I am getting that. It is the hard work I am doing. Because I am bending up to pick it up, that's why I am getting it. That's all earned income. So that way you will start respecting all the money which comes to you. Great, thanks. Okay, any questions? Because I've been...
The money that you don't find
money?
If you have lots of money to invest, you don't find attractive stocks to invest, where do you park it? Do you keep cash, or is there a particular short-term instrument where you try to?
See, normally, if I want to be an investor in stocks, I would do is, I would keep it in liquid funds, because I am looking at opportunity, or a short-term fund.
But there, what are the charges like? Doesn't that money actually lose its value by?
Yes, it loses. But I am looking at it as an opportunity cost. No? See, first is, life is never black or white. It's always shades of grey. So it's nowhere, even what I am telling you, it's not foolproof answers for anything. The idea is that, okay, according to every individual, Are you able to do certain things, As I told you in my first lecture, we all are ignorant. We all are making decisions with half-baked knowledge. So is the case with me, so is the case with everyone.